Welcome back to another weekly review of these markets. We're going to go over a bull scenario, a bear scenario, and then all you have to do is sit back, see which one of those scenarios starts to play out, and then execute the game plan that we are going to go over together. So let's dive into these markets. Let's start with the bull scenario here on SPY. So a few areas that I am keeping a very close eye on is going to be 575. This is a big time resistance now that the bears have confirmed for multiple times, not to mention it was a previous support. If we start getting some daily closures up above that, I could see these bulls trying to step back in and take it to the next level, which is going to be 585. That's going to be a pretty big challenge. But if it can get through 575, then finally we should be hitting that magical 590 to 600 range, and we'll see what happens from there. The bear scenario would be if we start taking out the low from Thursday. So if this low starts to get taken out, it has everything to do with the close of that daily candle because of the amount of support right underneath it. So if this does break and then gets bought up hard, odds are we have some more ping-ponging going through here between the 10 EMA and the 50 EMA on a daily. That's the highest probability scenario this week, is that we get a whole lot of chop. So be very, very cautious of that false breakout to the downside and then a reversal back up. Something that I'm watching very, very closely. If we do end up closing pretty strongly below 565, then 560 is a super important level that I will be watching very, very closely. It is a large put strike location, which means the amount of open interest there on the puts is extremely large, which gives me a very good clue that this could be where the bulls are going to try to be at. But it's also right at the weekly 20 EMA. So as we come back into this area, this could be where these bulls are waiting. This is where a lot of the bears are going to be taking their profits. That's where I am initially going to start looking at taking some profits off of my bear positions, is off of this weekly 20. So if the bears are looking at taking profits down here, it's usually a pretty good buying spot. So if you have a decent setup that occurs right around this range, it's probably a pretty decent play to take back up. I believe these markets are going to finish the year out pretty strong, but that doesn't mean that we can't see some crazy volatility going throughout this week. So with the election playing out on Tuesday, if we have any sort of undecision going into Wednesday, where they're recounting votes, where they're going through, any indecision at all, markets hate uncertainty. And that could cause us to really start selling through even more. So I would expect us to be down into about 560 to 565 going into Tuesday. So possibly today on Monday is another inside candle. Maybe the bulls try to pop this up one more time and it starts to drop. Maybe the bears come back down and maybe they don't close quite as strong. I don't know. I don't have a crystal ball. But one thing I do know is that the markets love to get to these important levels right before big news events. So I would imagine with high probability that we will be sitting around 560 on Tuesday, or we're going to be sitting right around 585 or so come Tuesday. I don't know what's going to happen. I just know historically we tend to sell going into the election, and the bottom of the markets historically have tend to be right around the day of, if not the day after the elections in a normal year. Doesn't mean that it has to play out this year, but it is something to look at. Our next ticker you're going to review are the Qs, but before we dive into that, I want to let you know some huge news. If you have wanted to join our trading community, now is the chance. You can get access to our trading community for life with a one-time payment right now of $25. Link is in the description down below. Just a one-time fee of $25, and you will have lifetime access to our trading community in Slack. This is a huge deal, a huge promotion we're putting on. It won't last long. Link is in description down below. For the Qs, we have broke an extremely important up channel and closed very strongly below it, retested it on Friday. If we at any point over the next few days start to take out this 485 level, this could have some strong selling to it. So the bears scenario right now is extremely strong based on what the price action is telling us. We want to keep a very close eye on the low of Friday and see what it'll go from there. If we do start closing below that, the next stop is going to be the 100 EMA sitting around 475. So that could be a pretty strong buying area. If we zoom on out to the weekly, the 20 EMA is all the way down around 476, 477. So this level really does have a lot of significance, and I think these markets want to get there. Then we're going to look to see if these bulls will reverse this thing back up and start to push. The Qs have not made a new all-time high. So I strongly believe before the end of this year, we will see an all-time high happen on the Qs. As soon as we get that new all-time high, I think selling, some sustained selling is around the corner. This is still a buy the dip scenario, in my opinion, based on the larger time frames, but it is not looking extremely strong. So there's your bear scenario on the Qs. Your bull scenario would simply be a close back up into this gap fill area around 495. If we can close strong through 495, there's a chance it could squeeze straight up and make that new all-time high pretty quickly. So I would keep a very close eye on like 491 area, that 10 EMA on a daily. That area should have a lot of bears. And so if it starts to really close strong through it on a daily chart, the bears didn't do their job. And most likely these bulls start to jump in on that weakness and push this thing into a new all-time high. IWM. So IWM has made it back up into its key bear level, sold off hard, tried it one more time, and sold off back again. So, man, it seems to me, again, for the bear scenario, that we want to push right back into this 215 level on the IWM and see if the bulls will step in from there. I'm not sure if they will. If this blue trend line starts to break down, and there is a long way to go. IWM tends to be the first one to go, by the way. So this is kind of like my canary in the coal mine type ticker. If IWM starts breaking all of its bull buying levels and really just dives into the basement, I know that SPY and Qs are going to be right behind it very closely. Nothing is showing those red flags yet. In fact, I do think that we will get some selling, but it should get bought up. But I will be watching this trend line this week to see if the bulls step in where they should. If they don't, then we probably have a little bit of buying and then rotation, and you could expect to see IWM start to fall off the map probably within the next month or so. I don't see that happening. I just want you to be prepared if that scenario does come to play. For the bulls, again, a strong bounce off of this trend line would be a really good play for the bulls, or a move back up above 223. So the markets are all kind of having a very similar setup, but mark those levels out. Those are big option levels. Those are huge levels when it comes to sentiment. If we start breaking down, now I know their hand. I see that the bulls are not strong, and it's worth now taking a trade out there with a 55% win rate to see if I'm right. If I'm wrong, I lose small. If I'm right, I win big. Same thing to the bull side. If we start closing up here, cool. It's worth taking a bullish play, and if I'm wrong, I lose small, and if I'm right, I win big. That's the game of trading, rinsed and repeated. But right here, I don't see an edge. Now, I can go to smaller time frames. I can kind of day trade this and get an edge on other time frames. But if we're looking at the bigger picture is what I want you all to focus on, because this is where the easier trading is. The hardest part about this is just being patient enough to wait for the markets to show their hand. Most people get bored after 2 or 3 days of not taking a trade, and then they find a way to screw things up. Stay patient. Put your alerts out on your levels and wait for those alerts to go off. If it starts to hold these levels, you have a pretty good idea now that bulls could be coming in. If it starts to reject off of these levels, you have a pretty good idea. Bears could be coming in. We close across these levels. Now you have very clear sentiment of where some large moves could be coming, bullish or bearish. Take this approach in your trading, be a lot more patient, have a game plan, and then apply your setup when the game plan shows itself. You will start making so much more money on that. I love you guys. Hope this helps you have a better game plan for this week so you can see better returns in your trading. Don't forget that link down below. It's the very first link to join our trading community for life for a one-time fee of $25. I'm not sure when the next time is that we'll do this, but please come join us, come trade with us. We post charts in there. We have free weekly education courses in there for that you can enjoy to learn a little bit more on trading. Because again, we are a trading education company. Our goal is not to give you a fish. Our goal is to teach you how to fish. And that's what we are extremely good at. So come give us a shot. $25, one time, lifetime access. Come hang out with us. Can't wait to see you guys there.